Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to describe about income tax return filing for AY 2026 to 27, important updates on deduction claims and documentation. Introduction. The Income Tax Department has introduced several important changes for taxpayers filing income tax returns ITRs for financial year 2025 to 26, FY26 or assessment year 2026 to 27, AY27. The department has already released the Excel utilities for ITR 1, ITR 2, and ITR 4 on the official e-filing portal, allowing taxpayers to prepare their returns offline before uploading them online. Along with this, the department has also prescribed additional disclosure requirements for claiming deductions under various sections of the Income Tax Act. Taxpayers are now required to furnish more detailed information and supporting particulars while claiming deductions under Section 80C, 80CCD, 80D, 80DD, 80E, 80GG, 80U, and others. These measures aim to improve transparency, reduce incorrect claims, and streamline verification during return processing. Availability of ITR utilities and filing process. The Income Tax Department has made available the Excel based offline utilities for ITR 1, ITR 2, and ITR 4 for AY 2026 to 27 on the official e filing portal. Taxpayers can now download these utilities, fill in their financial details offline, generate a JSON file, and later upload the same through the online portal after proper verification of all information. To file the return, taxpayers need to log in to the official income tax e-filing portal using their user ID and password. Individuals using the portal for the first time must complete registration by providing PAN, Aadhaar, and other required personal details. Additional information required for Section 80C deductions. From AY 2025 to 26 onwards, taxpayers claiming deductions under Section 80C must provide extra details while filing their returns. In addition to mentioning the deduction amount, taxpayers are now required to disclose the relevant policy number or document identification number connected with the investment or eligible expense. This change applies to common 80C investments such as life insurance premiums, Public Provident Fund PPF, tax saving fixed deposits, ELSS investments, tuition fees, and other eligible instruments. Disclosure requirements for Section 80CCD1 and Section 8 and 80CCD1B. Taxpayers claiming deductions under Section 80CCD1 or Section 80CCD1B generally relating to National Pension System NPS contributions must now furnish additional details in their ITR forms. The required information includes the amount invested and the PAN details of the taxpayer. These disclosures are intended to strengthen validation of deduction claims related to retirement savings schemes. Additional information needed for sections 80DD and 80U. Significant reporting requirements have also been introduced for deductions claimed under sections 80DD and 80U, which relate to disability related benefits. Taxpayers must now provide detailed particulars including nature of disability, type of disability, amount of deduction claimed, PAN of the department dependent, Aadhaar number of the dependent, acknowledgement numbers of Form 10IA. These disclosures are mandatory for taxpayers seeking deductions under these provisions. Extra details required for Section 80D claims. For deductions claimed under Section 80D relating to health insurance premiums, taxpayers are now required to furnish detailed insurance related information. The new disclosures include name of the insurance company, policy number, amount paid towards health insurance premium, This requirement is expected to assist the department in verifying genuine medical insurance claims more efficiently. New reporting rules for sections 80E, 80EE, 80EEA, and 80EEB. Taxpayers claiming deductions on education loans, housing loans, or electric vehicle loans under Section 80E, 80EE, 80EEA, and 80EEB must now provide comprehensive loan related information in their returns. The details required include name of the bank or financial institution, loan account number, date on which the loan was sanctioned, total loan amount, outstanding balance as on the filing date, interest amount claimed as deduction. These additional disclosures are aimed at improving verification and reducing inaccurate claims. Mandatory filing of Form 10BA for Section 80GG. Taxpayers seeking deduction under the Section 80GG for rent paid are now compulsorily required to file Form 10BA before submitting their income tax return. While filing the return, taxpayers must mention the acknowledgement number of Form 10BA in Scheduled 80GG. Without filing this form, deduction under this section may not be allowed. Mandatory filing of Form 10IA for Sections 80DD and 80U. For deductions under Sections 80DD and 80U, filing Form 10IA has now become mandatory. Taxpayers must provide the date of filing and acknowledgement number of Form 10IA in the relevant schedules while submitting the ITR. This step has been introduced to ensure proper authentication of disability related deduction claims. Important due dates for filing ITR. The due date for filing income tax returns for individual taxpayers for AY 2026 to 27 is 31st July 2026. However, taxpayers filing returns under ITR 3 and ITR 4 have been given time till 31st August 2026. Those who fail to meet the original deadline can still submit a belated return up to 31st December 2026, although certain penalties and restrictions may apply in such cases. Why salaried taxpayers should wait before filing returns. Salaried individuals are generally advised not to file their returns immediately at the beginning of the filing season. Experts recommend waiting until at least 15 June so that all TDS related information gets properly updated in Form 16, Form 16A, Form 26A, and the Annual Information Statement AIS. Banks, employers, mutual funds, fund houses, brokers, and other reporting entities are allowed time up to 31st May to upload financial information. After submission, it may take another 7 to 10 days for the updated details to reflect in EIS and Form 26 AS. Filing returns before these records are fully updated can create mismatches between the taxpayer's returns and official tax records. Such mismatches may lead to notices from the income tax department and can also delay processing of refunds. Conclusion: the income tax department has significantly strengthened reporting requirements for taxpayers claiming deductions under various sections of the Income Tax Act. While these changes increase compliance obligations, they are intended to improve our transparency, minimize incorrected claims, and simplify verification procedures. Taxpayers should carefully maintain all investment proofs, insurance records, loan statements, and relevant forms before filing their returns. Proper cross checking of Form 26 AS, AIS, Form 16, and deduction related documents can help avoid notices, mismatches, and delays in refunds. Timely filing along with accurate disclosure of information will ensure a smoother and hassle free return filing experience for AY 2026 to 27. Disclaimer: this article is meant purely for informational and educational purposes. Tax laws, deduction rules, and filing procedures may change based on notifications issued by the Income Tax Department or the Government of India. Taxpayers are advised to verify details from the income tax portal or consult a qualified tax professional before filing their income tax returns or claiming deductions under any section of the Income Tax Act. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.